Well, hello everyone. Welcome to Getting Started with Technical Analysis. Today we're going to talk about support and resistance. And it support and resistance, those terms make me think of a lot of things. One, as a parent, I offer my children a lot of support. And what did I get when they were teenagers? A lot of resistance. Isn't that the way life goes? And I can't believe right now that I'm offering to provide support in this webcast, and the resistance I'm up against is a pretty exciting soccer match that a few people may be watching. Out of the corner of their eye. And so, if you are a fan of soccer, I applaud you for being here, even if you are just watching this out of the corner of your eye. We've got Mr. James Boyd with us in the chat. He's a friend and a fellow coach, and he knows all this stuff inside and out. So, if you have any questions, don't hesitate to ask. If you're not following us on X, you're missing out, my friends, at Barb Armstrong CS and at James Boyd CS. You can also wander over to LinkedIn and find us there as well. Okay, so just before we get into the thick of things, I just want to remind everybody, because we're going to look at a lot of charts today, that examples, and we're going to look at a lot of them, are provided for example purposes only. And, this is educational. None of it is intended to be construed as a recommendation. And this is Intro to Technical Analysis. So, we're focusing on technical analysis. That doesn't mean that fundamental analysis doesn't have its place, being aware of what's going on globally, understanding what's happening when earnings come around, which starts again next week. Feels like we're in a never-ending loop on earnings season. It's like the song that never ends. But we're going to use the Paper Money software application on the Thinkorswim desktop platform. And yeah, somebody said it's Fire Hose Day. Yeah, every day with me tends to be Fire Hose Day. And somebody mentioned, a couple of positions that are getting, or stocks that are getting heavily hit today, and we may look at those as examples also. If there are others that you would like me to look at, just type them into the chat. And I do have a list of things I want to look at and reasons I want to look at them, but I'll do my best to kind of work those in. So, I've designed this to be taught in about a 9-week rotation. In addition to that, we're going to add some bonus sessions on Bollinger Bands, on different indicators, on Fibonacci's. I do one called the 8 Things I Wish I'd Known About Trading When I Started. So we're going to, add those to this list. But right now we've started back at the beginning, and we're going to look at support and resistance and how that we can use those as guidelines in our trading on when to enter, on when to hold them, when to pause and wait, on how to set targets, on how to set exits, entries, all of that good stuff. And if you're here for the very first time, feel free to type a greeting into the chat. We link arms together every Tuesday at 2 o'clock Eastern, and we're figuring this stuff out together. Okay, so we're going to look at some of the basics of support and resistance, show you different ways to identify that. I tend to be pretty visual, so that tends to involve a lot of drawing of lines on the charts. And that's, to me, where the magic really happens, is in drawing this stuff out on the charts. So support is simply this area where, when the price is falling, buyers tend to step in and say, okay, this is too good a deal for me to refuse. I'm going to come in and start buying. Let me just see if this is okay. I have a drawing tool that I love, but it's kind of, she loves me not, works sometimes. And then I'll go to use it an hour later and it'll be, on an unpaid break. So, buyers tended to come in here and here and here, and then it came back down into this neighborhood. And you'll see we have this gray bar, right? Indicating that support and resistance are not finite numbers. They are really more ranges than they are finite numbers. And that's why we have this bar here. But this is, and I always think of support as the floor. And I don't know if I'm just remedial, but when I first got into this world of investing, I'd have trouble remembering which one was resistance and which one was support. R comes before S in the alphabet, so it should be higher. So there's our resistance. Think teenagers. My teenagers all ended up being higher than I was. Yeah, I was the house elf at 5'5". You know, my daughter's like 5'9" or 10, and the boys are 6 feet. Okay, so when we look at resistance, it's that ceiling. Okay, and again, very similarly, you know, we've just kind of flipped it and reversed it. You know, we had this area, you know, where it came up and it hit its head again and again and again here. And then it came up into the neighborhood and came up again and came up again. But every time it came up and looked like it was about to break through, it ended up rolling over and coming back down. And the candle pattern that ended up forming, let me just, here we go. We call an inverted head and shoulders. So there's the shoulder, there's the head. Looks kind of like a ghost, doesn't it? Uh-oh. Actually, when it breaks out, you know, and the way a technician might measure this pattern is to say, hey, if this is $30 from top to bottom, support to resistance, then we'd expect a move if and when it breaks out of maybe $30 to the upside. Okay, but it's support and resistance that help create these patterns. Okay, and what's happening here is it's trying to move higher and it's getting shut down. And, you know, like support, these are general areas, and this is why we have this gray band here rather than a finite number. And I think of it, my father-in-law was a big fan of history, and particularly medieval history. And my kids had all these nights, and I kind of think of it as you have a night, you know, at a post. And every time it comes up and hits it again, you have another knight joining the wall. And there it like hit like 6 times, and then it came up and hit again and again and again and again and again. And the more sentries you have guarding this wall, the stronger it becomes. And that's just how I tend to think of it, both at support and at resistance. I don't know if that's a helpful analogy or not, but it certainly worked for me. Okay. And we're not going to spend a long time on these slides. So Fibonacci fans, Bruce, I'll put on the list, but it's not on the list for today. Okay. Okay, so, and one thing about support and resistance, if you think of this as a, you know, apartment building, you know, old support can become new resistance. So an old floor can become a new ceiling. And we see this happen frequently on the charts. And vice versa. We can see, you know, an old ceiling becoming a new floor. So this is something that we want to watch for on the charts as well. And if you draw a trend line, or you're using a moving average as a trend line, or it's acting as a trend line, then, you know, we can have bullish trend lines and bearish trend lines. So everything doesn't have to be horizontal. You know, we can have diagonal resistance lines also. And I'm going to show you several of them. And in fact, James talks about this often in his class, and that if you don't take advantage or acknowledge horizontal resistance and support lines, you're missing out on, you know, the potential is there to miss out on some opportunities. So, you know, here we have our resistance. Here's our support, and it's forming a channel. And what some traders might do is trade within a channel. And how would you do that? Well, you might say, okay, well, if this comes and bounces off this support line, I'm going to buy here. And when it comes and bonks its head and starts rolling over, I'll sell there. And then I'll buy here and I'll sell here. But if you bought here, and where would you put your stop? 3% below this support level, you would have been out probably around there. And the first two times would have worked, the third wouldn't. But that's one way to trade it. Now, another way to trade it might say, I'm going to wait for it to break out of this channel. And if you're a stock investor, you might expect it to then really move to the upside, or you may want to do this if something's been downtrending and you're seeing this as a trend reversal. Yeah, so this is, somebody's saying this is a continuation channel. Yeah, and I'm going to show you some bearish examples of this as well. Because we can see these channels both ways. Now with gaps, often when we see something gap to the upside, the start of the gap often will act as a support level. So we could see, and when you have a big day like this, you would see the first support level would be halfway through this candle. The second support level would be here. And so here's support level 1, support level 2. And in fact, in this example, it came back down to the beginning of the gap, went up, came back down and tested it again. And I think we'll see an example of this, maybe on Intel, but we'll see. And so gaps can indicate a new level of support and resistance. Now, sometimes it'll come all the way back down. This support level won't hold. This would be considered support level number 3. So sometimes, the gap will end up filled in. Okay. And the bigger the gap, the more significant it's seen as being. Well, that's not a big surprise, right? So let's get out and look at some things on the charts. So today we're having a down day. Yesterday, everything was looking tickety-boo. This is the NASDAQ 100. And we've seen this extraordinary move to the upside. Like if you want to measure it from the end of March, through, I forget what date this was, but we'll see in just a minute. We had a 35% move to the upside from the end of March through the beginning of June. And then we had this pullback and it started to consolidate. And if we draw our lines, in playing I Spy with my little eye, it had this pullback and then we're seeing higher lows, but lower highs. And so what a trader might be looking for is for this to break to the upside and to see this as a, as not an unsurprising consolidation, after a tremendous run to the upside. Okay. Yeah, I'm seeing a lot of pennants setting up also. Now, if we look at the rut, I don't see as much of a pennant here. So this is our small caps, 2,000 of the smallest of the large cap of the small caps. And this had a 26% move to the upside. And it's just, it seems to be rounding out a little bit. Like we're seeing, let me just change my drawing tool here. So we're seeing, low, similar low, similar low, similar low. Okay, so it's a bit of a bull flag in a stiff wind, if you will, because it's kind of coming straight out as opposed to pulling back. Okay. But, we're still within a stone's throw of the all-time high here. And then if we look at the Dow, I mean, it hit a new all-time high today. So it's just continuing to march on up the hill. And the S&P, Another pennant pattern. Now, the way that I drew it, I tend to cut the wicks off where I can. But if you redrew that line and you said, oops, I guess I need to fix my drawing tool. But it's still, however you draw the line, it's still looking like a pennant pattern. And you might have said, okay, well, the way I'm drawing it now, it looks like it broke out yesterday and it's coming back and maybe retesting today. But we'll see. Now, I do want to place a couple of example trades, but I want to look at some different patterns first where we can look at support and resistance, okay? So let's look at, say, workday. So when we look at workday, this is a stock and all the indexes are up and up pretty dramatically this year. Workday's been on the struggle bus. It's down 33% year to date. And when we look at this, it's come down. And again, if the Knights have finally shown up, and if you're a fan of Workday, you'd be saying like, okay, about time. But we had this low and then it hit it again and again. And then like 4 days in a row, it hung out here. But when it comes up to like this neighborhood around 152, it seems to be getting shut down. And so it's trading in a range. And some might say, well, like I like to trade, how might I trade this? Well, some might say, if it comes back down here again and bounces, I could buy the stock around that 112 or 113 mark and then put in an exit to sell when it gets back up to 150. If you like to trade options, you might say, I'm going to create a credit spread sandwich and I'm going to sell a short call vertical up here because I think it's going to stay below 150-ish, and a short put vertical down here because I think it's going to stay above 112, and we call that an iron condor or a credit spread sandwich. So there are different things you can do, but if what we're looking for is for this stock to change from downtrending to uptrending, we don't have confirmation yet that it's broken out of this sideways trend. What we might want to look for is for it to break out above, come back and retest, and then move to the upside. And so you might look at that and go, oh, might be shaping up. Here's our support. Here's our resistance. But for now, I'm going to sit on my hands and do nothing because I missed that entry when it was back down here if I'm a stock trader. Okay. So that's Workday. How about Dell? Let's have a look at Dell. So with Dell, I mean, up 236% year to date. So might you say, well, this stock is dead to me because like, how can I trade something that's already had that big a run? Well, it's in momentum and that's an advantage. But what we've seen is this consolidation. So we're seeing right now lower highs, but higher lows. And so like this latest candle that we've got today, it's up almost 3%, but it's still within this pennant pattern. So we're, some traders might choose to wait and say, I'm going to wait for it to break above and come back and retest, or at least, have 2 up days so that we have more confidence that it's, that breakout is actually a breakout and not a fake out. Okay. How about Cadence? Yeah, we do have a bullish engulfing pattern here today, and that is considered bullish. And it's bullish and it's at a support level. So we had a Harami pattern here, bullish engulfing pattern here, but it still hasn't managed to get by this horizontal resistance wall. That wall is still holding tight. So we may just want to wait on that one. So cadence. So when we look at cadence, like we had a downtrend happening here, and then we had this diagonal resistance breakout. And remember when I said you may want to wait for it to come back and retest? Well, I mean, this baby did not come back. It just broke out and kept on going. And that's why I added that caveat. You may want to wait and see if it has at least 2 up days before you consider getting in. And some days it'll go up for 2 or 3 days and then come all the way back. Excuse me, old resistance becoming new support, and then sometimes that support won't hold. But this one took off, and you know, if we're just hauling out all our technical analysis terms here today, created a bull flag, and then kind of another one, and then another one, and then it's like, and bull flags are, you know, higher highs, higher lows. And then all of a sudden it's like, okay, this is now breaching this. So now it looks like it's setting up a bit of a pennant pattern, but it's still within this pennant. And we're waiting for, you know, a technician might say, I'm going to wait for that to break out and declare itself. And if it doesn't, well, it doesn't. Okay. Somebody had mentioned INTC today and that it was taking a hit. And it is taking a hit today. And, you know, yesterday we talked about this in trading a smaller account because it had a Harami pattern happening here, which doesn't require a confirmation. This is considered a bullish configuration at a support level, and yet it broke down today. And so the next thing one might look for is, oh, is this line going to hold? Or is this line going to hold? But a tough day for Intel. Now, if we look at ARM Holdings, it's a little different scenario. This stock, even with the you know, it being down almost 6% today, it's up 177% year to date. And if we come in and look at this, again, it's come back down to a previous support level once, twice, and now we have this candle of indecision. So, you know, which requires us to wait. So when we have this doji type pattern, we're looking for a close above the high of the low day. So if this is the low day before we placed a bullish entry on this, or a bullish to neutral candle, if we're looking to do a bullish trade, you'd rather that Harami candle be green. But if you're using candle trend, and it's a true Harami, it's an inside day, that Harami candle is going to be some form of green because it's closing higher than the low of the previous day. Like here, you had a down day. So this is dark green, meaning it closed lower than it did the day than it did where it opened, but it still closed above the day before. I would still interpret that as bullish. Okay. But, you know, now it's come down to test this support level, and a close above the high of the low day means you'd want to see it closing above 314.90 tomorrow. Okay. So that's ARM. So if you had a bullish position on this, does it mean you need to exit immediately? No, but you need to be ready. And if you put in an exit before you place the trade, your exit might have been 2 or 3% below this 305.50-ish level to begin with. Okay. So let's look at Meta, and then we'll go and look at one that we might want to place an example trade on. So Meta too has been on the struggle bus. It's down 5% year to date. You know, and here's our 100-day. This black line is a 100-day moving average. It's just been moving down the whole time. But what we've seen recently, is this move to the upside, but it's kind of forming a bit of a pennant pattern. And I started this line from here. Some might say, well, I'm going to, start my line from here. But either way, it's forming a bit of a pennant pattern. And so before you wave the flag and say, cheers, this is no longer trending, yeah, you may want to just sit on your hands and be patient and wait. And somebody said, on ARM, this can be a potential head and shoulders setting up. And you're absolutely right. I was going to mention that because we've got either a double top or this could be the first shoulder, the head, and we could have another shoulder setting up. But as of right now, we still have higher highs, we have similar lows, and we'll just have to wait and see how things play out. Now, I talked about support and resistance not always being horizontal. And if we come and we look at Google, this is an old line, but this is a stock, it's up 18% year to date. If we look at the last year, it's up over 100% in the last 12 months. So it's done not too badly, but recently it's pulled back. And just in the last couple of days, after this pullback of, let's see, we went from here to here, that was an 18% pullback from the high to the low. It started marching bullishly, and we have this diagonal resistance breakout that occurred yesterday. So on Thursday, we had this doji pattern, this candle of indecision. It broke out yesterday and is continuing to move to the upside today. And so if you were interested in Google as a company and you said, I wouldn't mind owning this, I'm not sure I want to put a ring on it, but I wouldn't mind owning it for a little while. And maybe I'd like to do a swing trade. Like this previous high up here, if we don't count this wick, was maybe around like 403. And the advantage of buying something as it's breaking out is that we have a support level, or what we expect will act as a support level here. So if we said, like, if I take this 366 level and go like 2% or 3% below that, my stop would be at, say, 346. And then I'm going to put my target up here around 403. Okay. So here's a way that we could take advantage of potentially a diagonal resistance breakout. And if we're doing the stock, we're just going to right click. We're going to buy custom with an OCO bracket. We're going to put our target at 403. And we're going to put our exit at 346. Well, the way my calculator worked it out, it was 346.29. And I'll make both of those good till canceled. Confirm and send. And so the most we can make on this is $33.83 a share if we're called out. The most we can lose on it is $22.88 a share. And we multiply that by 100. So if we said we're okay with risking $2,500, now there's no guarantee that we're going to get out at exactly those prices. So we have to be aware of that. But we have a little bit of bandwidth if it were to gap down and we were to get out a little bit lower. So we're putting that in our stock with target, and this would be called a swing trade. Okay. So that is our friend Google. Now, for the fans of horizontal breakouts, if we come and we look at Reddit, it went through this period of consolidation, right? And some might say, well, if I squint and look at it just right, and I'm playing I Spy with my little eye, I see, and go ahead and type in what you think it is, but I see kind of like this cup and handle pattern. Maybe I'm just seeing cups because I'm having a coffee. So here's our cup and handle, steam rising. And what we're hoping is the stock is going to rise. And by how much? Well, a technician would measure this distance and say, well, if it's in that neighborhood of $63, then I might put in a target. If I wanted to put in a target and I'm going to just add $63 to that, which would make it about 246. So up here. And, if you were doing a swing trade, you might make your target around 260. So if we said, oh, we're going to do this based on this cup and handle pattern, and, that would make it 246. How about we just make it, it's currently trading at 204.30. Why don't we just make it 244? And then where would we put our stop? Again, we might say, well, this was acting as a resistance level. I think it would hold as a support level. That would be the expectation. So then we might put our exit 3% below that. Does that make sense? Yeah, so Google has recently joined the Dow. And what that does for a stock when they're added to a major index like that is that any mutual fund that says it tracks the Dow then needs to add shares of Google to the mix. So it can increase the demand at least temporarily for a stock, right? So there's our Google. We're going to come to the trade tab on Reddit. Again, we're going to do this as a stock trade. I'm just going to keep it simple. We'll buy 100 shares. We're going to put in our target at 246. Well, I said what, 244? And this isn't a set it together, set it and forget it. Like I remember we did a trade on Apple one time. It got within 15 cents of the target and then looked like it was going to turn around and pull back. And so if you're not watching these, you can miss an opportunity to get out pretty close to what you were hoping for or what you were planning on. 177.59 is our exit. So 244 and 177.59. And so the most we could make on this if it hits our target is $40.35 a share. And we're risking 2,600 to do that by putting our stop at 177.59. We're putting that in our stock with target. And this target is based on the width of the cup and handle pattern. Yeah, so Bruce, you had it. Okay. Now, somebody wanted to look at CLX. So let's go have a look at that. So CLX has been downtrending, right? Like it's down 3% year to date. But if we look at Clorox, it started to consolidate because I'm seeing higher lows here. So if we look at that, we've got a series of higher lows, but then that's coupled with, like it could be breaking out. Depends on how you want to draw it. Lower highs. And then today it looks like it's moving to the upside, but this dark green candle means that it opened higher. So today it opened at 99. It's currently trading at 97.61. It's still trading above where it closed yesterday, but we've got like 3 candles of indecision. And so you might want to wait for a day to say, is this a breakout or might it be a fake out? And and we don't know. Okay. Goldman Sachs. So when we look at Goldman Sachs, I'm seeing a lot of pennants starting to appear on the pattern. I just posted something on 3 white soldiers, and it's hard to get a classic definition, but that's why I had a box around that. So we can remove that now. But if we're looking at this, or you may want to start it from over here. Kind of a pennant pattern setting up here also. Goldman Sachs. I talked about a downward channel, and that would be Palantir. So, an interesting company, but man, it's been struggling. It's now trading at 138. In November of last year, it was trading at 207.50, and it's just been in this downward trending channel. And even though we've had, what, 5 or 6, 7 or 8 up days in a row, 1, 2, 3, 4, 5, 6, 7 up days in a row, it's still trading within this downward channel. So a few up days do not a trend in direction necessarily make. This is still trading within that downward channel, and it kind of behooves us to respect that, right? Somebody said that coin, if we look at coin. So coin, when we look at this, I need to add some more space at the bottom. It's really been going sideways, and it's been going sideways for quite a while. So I would say this is really just, it's range bound between about 141 and 211. We had a potential cup and handle here, but it didn't break out. It just came down again. So it's been trading within this sideways range, right? Like in Flute's been doing the same thing. And so when we look at a stock like this, and if we come in a little, it's gone from 313 down to $91 a share. Man, that's when, your buy and hold strategy, you're really starting to reevaluate, right? And say, maybe when I buy something, I should put in an exit, like in the cold light of day, to protect myself from this type of event. But, it looks like it's finally finding a bottom. But it's currently trading in a range. This could be setting up a bit of a double bottom, but what we'd be looking for is it to break above this 113, 114 range. And then, and then the width of this range going from, 91 to 113, that's only about $22. This has fallen a lot further than $22, but that would be a potentially expected move. Okay. Let's look at Altria. And here's another one where, and if we back things up a little to a 1-year chart, this is, I call this a Tums chart. It's enough to give anybody indigestion because it's not really a nice uptrend. It's not really a nice downtrend. It's kind of been all over the place. But of late, it is up 25% year to date. And, we're just seeing kind of similar highs or slightly lower highs and higher lows. So it's setting up this coiling pennant pattern again. Yeah. Okay, let's look at DOCN. And then I'm going to show you a couple of resources and it'll be time to wrap things up. So if we look at this one, here's another one, up almost 200% year to date. But, you know, me with my line drawing, you know, we've got, you know, maybe it's starting to bounce. It could be a double top setting up, or this could have just been a period of consolidation and it could continue to move to the upside. But where you want to see it move is above this, you know, 183 to 187 level, where it seemed to have trouble getting past that. But, you know, up almost 10% today, up 9.7% today, but came back down. So here's a gap example, right? It gapped up. Where did it come back down to? Where the gap started from. So good example of that. All right. Now I want to show you a couple of resources. If you haven't subscribed to the Trader Talks channel from Schwab Coaching, you'll want to do that. If you're new to this class and you want to do some binge learning, you can come to playlists. And if you scroll all the way down to the bottom, I'll put a link into this at, you know, in the body of the notes of this webcast in the archives, and there will be a link at the end of the recording also. But here's the Getting Started with the Technical Analysis playlist. And you can see last week we started again, you know, lesson 1, lesson 2. This will be the third one in that series. And then I've created another group called the Trade Management Mini Sessions, and just to put them all in one place. And they're also in the Getting Started with Technical Analysis series, that folder. But right at the top of this list, I've got now, there's 13 or 14 of them. 14. So, and they're all like 2 to 5 minutes long. They're just little mini sessions on different candlestick patterns. And we talked about hammers and haramis today. We talked about bullish engulfing patterns. And so if you're new to this kind of terminology, you may want to catch some of these. I think you'll find them helpful. So guys, thank you so much for joining me today. Please hit the like button. It helps move this up in the algorithms on YouTube so that more people can find this content. Subscribe to the channel. Don't forget to follow James and I in the Land of X, Barb Armstrong CS and James Boyd CS. You can find us over on LinkedIn now as well. And enjoy the rest of your day. Up next is Swing Trading with Mr. Mike Fairborn. So stay tuned for that, coming up at the top of the hour. Take care, everyone. Bye for now.